We may have just covered their fourth quarter earnings, but Cerrado Gold has returned to the market now with their first quarter results. Investors will be happy to hear that the results improved on a quarter-over-quarter as well as a year-over-year basis, with Cerrado showing some improvement when it comes to cost containment. Don't miss the Rule Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Let's dive in. Cerrado Gold in the first quarter of 2025 posted top-line revenue of $28.8 million, an improvement from $24.4 million in the fourth quarter and $20.4 million in the first quarter of last year. The top-line figure follows the sale of 11,500 ounces of gold equivalent at an average realized price of $25.20 an ounce. Comparatively, Cerrado in the fourth quarter sold 10,100 ounces of gold equivalent and 10,300 ounces of gold equivalent in the year-ago period at average prices of $23.71 and $19.70 an ounce, respectively. And unlike in the fourth quarter and the first quarter of 2024, mine operating expenses actually came in lower than top-line revenue, meaning Cerrado posted positive income from mining operations. In the first quarter of 2025, this amounted to $2.3 million, as compared to a loss of $5.8 million in Q4 and a loss of $3.2 million in Q1 of 2024. However, after financing expenses of $2.1 million in Q1 and a $3.3 million charge on the remeasurement of a stream obligation, Cerrado posted a net loss in the first quarter of $4.2 million, or 4 cents per share, which compares to a Q4 loss of 1 cent per share from continuing operations and a loss of $5.4 million, or 5 cents per share from continuing operations in Q1 of 2024. Adjusted EBITDA, meanwhile, improved from negative $1.1 million in Q1 of 2024 and from $4.5 million in the fourth quarter to $4.8 million in the first quarter of this year. In terms of cash flow, operating cash flow grew to $7.4 million, which was up from $1.5 million in the prior quarter and from $4 million year over year. Cerrado ended the first quarter with cash and cash equivalents of $20.1 million, down from $26 million at the start of 2025. Post-quarter end, the company saw that position reduced further following a $5 million cash payment related to the purchase of MDN. Last quarter, when we inquired about the working capital situation, which sits at negative $13 million as of the end of Q1, we were told that a positive working capital position would come in at the latest in early Q3. That now has been pushed back to possibly Q3, definitely in Q4. Let's shift to the production data. Cerrado's first quarter production results were arguably a bit mixed. While the high-grade CIL operation saw gold head grades drop from 3.65 to 1.5 grams per ton on a year-over-year basis, they were up from 1.48 grams per ton in the fourth quarter. Heap leach operations, meanwhile, saw gold head grades improve from 0.59 grams per ton to 0.8 on a year-over-year basis, and from 0.73 grams per ton in the fourth quarter. The result here is that production was down at the carbon in leach operation at MDN, but up at the heap leach operation versus the first quarter of last year, with that same pattern also being true when compared to the fourth quarter. On a combined basis, Cerrado in the first quarter produced 10,700 ounces of gold and just under 40,000 ounces of silver, or 11,163 gold equivalent ounces. Comparatively, Q1 2024 saw the production of 11,204 gold equivalent ounces, meaning production was effectively flat year over year, while Q4 production totaled 10,431 ounces of gold equivalent. On a costing basis, things continue to improve at Cerrado. Total cash cost declined to $19.02 per gold ounce sold. While those ounces are still expensive compared to peers, the figure is down from $19.41 an ounce in the fourth quarter and from $20.42 an ounce in the year-ago period. As a result, the average realized margin per gold ounce sold jumped from negative $72 an ounce in Q1 2024 to positive $618 an ounce in Q1 of 2025. Margins in the fourth quarter were $430 an ounce, meaning that margins improved by an impressive 43% just on a quarter-over-quarter basis. All-in sustaining costs, meanwhile, came in at $19.32 an ounce, as compared to $19.53 an ounce in the fourth quarter and $20.45 an ounce in the first quarter of last year. So how are things looking for the full year in terms of guidance? Well, Cerrado is about right on target. Maybe a bit short if you want to split hairs, but they should get there. Current guidance is calling for 55 to 60,000 ounces of gold equivalent production in 2025. And based on Q1 production, if you annualize it out, they come up a couple hundred ounces short. That being said, heap leach production hit a new record of 6,900 ounces during the quarter, and things should continue to scale a bit from here. An expansion to the crusher has been completed, with more ore now being placed on the pad. Costing is a bit of a different story, however. Guidance is calling for AISC of between $1,500 and $1,700 an ounce. And production is going to have to come in heavy in the second half of this year if they wish to hit those targets. The bright side, however, is that Cerrado has now locked in some higher pricing for their gold sales. In April, the company entered into a limited hedging program for deliveries of 2,000 ounces of gold each month from May through December, with pricing to be in the range of $3,100 to $3,250 an ounce, which should lead to improvements in the average realized price of gold sold, something we were told was previously held down by prior hedging contracts. All right, so let's wrap it up. The first quarter saw a number of improvements for Cerrado in terms of their financial position, as well as their operational performance. We're not about to suggest that further improvements aren't necessary. They are still one of the higher cost producers amongst pubcos, but the progress here is a positive sign, especially if it can lead to a positive working capital position over the next few years. Post-quarter end, they also closed the acquisition of Ascendant Resources, which is something else to watch as they work to advance the now acquired Lagoa Salgada VMS project in Portugal. All right, everybody, thanks for watching. If there's stories you think we should cover, let me know in the comment section. Also, if you enjoyed this content, do me a favor, smash that like button, subscribe, ring that notification bell. All right, everybody, thanks for watching.